Hey guys, I hope you're doing great today, and I can't wait to bring you the show. But before I do, I just want to make a quick request. If you're listening to the show and you're getting good value and you're enjoying the content and you feel that it's valuable, if you could just take a second and go and give me a rating and review in whatever platform you listen, whether it be Apple or Google or Spotify, whatever it is, just go and give me a rating and review. That would be very appreciated. All right, guys, let's dive in.
And I decided, well, you know what? I want to be the principal in the transaction. I want to be the one buying. I want to be the one selling. Right. I want to be in control of my destiny.
You're listening to the Just Start Real Estate Podcast. If you're serious about your real estate investing business and need real answers, you are in the right place. And now, your host, Mike Simmons.
All right, thank you for joining me on Just Start Real Estate. I am excited to be here with you. I'm excited to be back in town. I just got back from Flip Hacking Live. As you're listening to this, it's been probably a few weeks back, but got a chance to speak to some great folks, great investors from around the country. Had a really, really good time talking to them. It super fired me up and invigorated me to come back and just share with you guys my own real estate investing program to kind of blow up that in certain areas, and just really, really excited for everything that I have going on. And I'm excited to bring you guys my guest today. Today on the show, I have Jorge Fajardo. He started his career in the mortgage and finance industry back in 2002. And in order to pursue his interests on a larger scale, he built his own mortgage company and was able to help tons of people during the financial crisis between 2008 and 2015. He established the Keystone Property Investments in 2015 and has since bought and sold over 100 properties, both single family and multifamily. Keystone has lucrative joint ventures in place which allow the company to scale and take on several projects simultaneously throughout different parts of the state of Florida. He also is working on a software that is pretty cool. It sounds really cool. I've never used it, full disclosure, but I'm going to check it out myself. And it's a lead gen software. It's designed to help you generate great quality motivated leads at a fraction of the price of what you're doing now. So we talk about that a little bit at the end of the interview, so you can check that out if you're interested. But guys, without any further ado, I give you Jorge Fajardo. All right, Jorge, thank you for being on the show. I appreciate you taking time to spend with us here and tell us about your story and what you guys have going on, because you have some cool stuff, very exciting stuff going on, and I want to make sure we can cover all that for the listeners.
Hi, Mike. Thank you for having me. I appreciate it.
Yeah, absolutely. Absolutely. It's going to be really, really fun. In just sort of reading about you, learning about you a little bit more before we talked here, and I know we'll touch on it. You've got some technology behind you and stuff you're working on that I think is going to be really, really cool to dive into with the listeners. I know before we jumped on live, we chatted for a second and you were just kind of like, hey, do you want to do this on the show or do it now? I really want to learn about it with the listeners, but I'm excited about it because I think there's some stuff here that could make a ton of sense. So we'll dive in and I won't ask you too hard. No, I'm just kidding. Well, I'll ask questions, man. I'm just going to ask questions like someone who might be interested. So sure, I'm sure you're ready for all that though. So I'm not worried about you. All right. First of all, though, because I've read your bio and I've read about you and I know some of your background, but everyone listening doesn't know as much as I do. So why don't you give us a bit of a brief history about who you are, what your background is, and how you ended up in real estate?
Sure. So I've basically been in real estate my entire career. I started fresh out of college in the mortgage industry as a loan officer, and eventually from there went on to open up my own brokerage shop on the mortgage lending side. And everything was going great right up until about 2008. And, we all remember what happened then with the mortgage meltdown and the housing crisis and everything.
Yep.
And so overnight, I found myself having to basically close down shop because lending had essentially dried up. And so in trying to figure out what to do, I actually ended up taking my lending and banking experience and knowledge and pivoting into the consumer protection side of it, going to work for a law firm that specialized in foreclosure defense and loss mitigation. And so with my knowledge and experience at the time, I ended up heading up the loss mitigation department for the law firm. And basically what we did during that time is, we would attend mediations or hearings and negotiate settlements on behalf of the distressed borrowers with the banks. And so the attorneys would do their thing. But, for the most part, attorneys are attorneys and they know their side of it, the legal side of it. But the bank would have, their own analyst or expert on their side. And so my job was to be the counterpart and essentially, just hash out numbers, just pounding out numbers and figuring out some sort of settlement on behalf of that borrower, which we now know as loan modifications, short sales, short payoffs. And so back in that time, it was actually as early as late 2007. We were negotiating short sales before everyone, even knew what they were. It wasn't a popular term back then. Yeah. And so, obviously, very, very quickly it caught on and everybody became very familiar with it. But that's how I got my start. And so, one of the things I noticed over the years, because I did that from about late 2007, all the way through about 2015 or so. What I was noticing is that there was a lot of the same investors coming back and being repeat buyers for our clients' short sales. Mm-hmm. And so, I was very intrigued by that. And so, little by little, I started, familiarizing myself with the whole investing side. Now, up until then, I had two rental properties that I had bought traditionally with traditional financing. Okay. Fannie Mae, 20% down and everything like that. Which I actually ended up having to short sell myself when the crisis hit. And so, as I saw these investors coming back for more, I started to talk to them a little more and familiarize myself. And I decided, well, I want to be on that side of the fence with these guys. So I started learning about wholesaling and creative financing and all these other strategies and techniques that I use to this day. And so that's basically how I got my start. Right around 2015, I decided to leave the law firm and I went into business for myself. And my first deal was a wholesale, but it was basically a probate subject to, and I believe the seller was also in pre-foreclosure. So, oh wow! So there was a lot of moving parts there.
Yeah, it was busy.
But that first check I got from that first deal was about 3 months worth of my salary at the firm. Right. And mind you, I was making six figures. And, that one paycheck was basically just, about 3 months or so worth of my salary. So, I didn't look back after that.
That'll get your attention. 3 months salary in one thing. Yeah. So when you were, just out of curiosity, when you were working through those short sales and things back early on, right, even before the big wave hit, I know that wasn't the beginning of the short sale, but were banks like a little bit caught off guard, or was it like, how bad was it when like 08, 09, 2010, like how crazy did it get and what kind of things did you see back then?
Well, so you're right. Loan modifications, short sales, those were not new concepts, but they were, basically stuffed away in the back drawer somewhere. And when the crisis hit, everybody had to kind of pull it out and dust it off and sort of, refamiliarize themselves with it. I myself didn't really know much about it. I basically trained myself on the fly with my own two properties, as I mentioned, just reaching out to the bank because I was underwater and the tenants were not paying and I was just looking for a solution. Yeah. And so it was kind of by trial and error. But it varied from servicer to servicer. And, we say banks, but the reality is, you're dealing with the servicing company, which is the third party company that the banks usually hire to service and manage their loans, and so it really did vary from company to company, servicer to servicers who went through. And then, eventually with the Making Homes Affordable program that was rolled out at the time, it was all incentive based. And so, I hate to say it, but, the lenders weren't, modifying or approving short sales out of the kindness of their hearts.
Yeah.
They were being incentivized in the back end, and basically getting paid for every homeowner that they actually helped. And so, whatever it took at the time to try to get through the problems.
So once you did that first deal and you made a ton of money on it, what were your thoughts? Like, what did you have a plan? Like, oh man, I'm all in now, or did it still take time, or how long did it take you to really decide that real estate investing was what you wanted to do?
Well, I had already made up my mind at that point. And so I started the company. It was late 2015. At that point, we were already starting to come out of the recession, if you will. The market had already, was already improving. It was starting to basically go back on the upside of the cycle. And so I had already made up my mind. And funny enough, when I started the company, it was because I kind of saw the writing on the wall. We weren't getting as many clients, and eventually came a time where I knew they weren't going to be able to afford me anymore. Yeah. And so I had to make another pivot, right? And I decided, well, you know what? I want to be the principal in the transaction. I want to be the one buying. I want to be the one selling. Right. I want to be in control of my destiny. Yep. And so, that first deal, I had just left the firm, but it was a referral from the firm. And it worked out, and there was no looking back. So, at first, I didn't have big reserves or anything like that. So I literally did have to pull myself up from the bootstraps, as they say, right? And it was mainly by wholesaling. Okay. I remember focusing on just marketing, sending out mailers. I was even getting deals off of the MLS, off of Zillow. I would get deals from driving for dollars. I would, see a sign with the high grass and kind of unkept. Yep. And I would call the real estate sign. And believe it or not, I made a lot of good contacts and connections that I still do business with to this day, from literally pulling over and calling a sign as I'm driving and building a relationship with that realtor. And, it's like I try to tell people, I mean, there was times where, let's say I'd had 2-3 deals in the pipeline, and I would actually that's how I learned to raise capital. I started small. I would go to friends and family and say, hey, we're in South Florida. So people expect higher deposits here, minimum $1,000. Sometimes could be as high as $5,000. And so obviously when you're wholesaling, if you do it right, you're protected by your inspection periods and your certain clauses that allow you to make sure you don't lose that deposit. Yep. But, when you have a lot of deals in the pipeline, what I would do is I would actually go to friends and family investors and say, hey, this is how it works. If you invest $1,000 for a 2-week period, if it closes, I'll pay you, 20% on your money, over 2 weeks. For $1,000, I'll give you $1,200 back. What did I care if I was making 10, 15, in some cases, I mean, I've made as high as 50,000 on one transaction. Right. And so that's how I started little by little. Just working with friends and family and basically giving them value, because, okay, you have, $1,000 in your bank account, hold it for 2 weeks, you get money back. If it doesn't close, however, then you get it back and but you don't lose it. So it's protected. Sure. And of course I would, make sure of that. And so I would have a lot of friends coming back and wanting to do it over and over and over. Yeah. And, and so that's how I transitioned from strictly wholesaling for about the first year and a half or so, to then starting to do some rehabs where, without really being conscious of it at the time or knowing, a lot of people are familiar with the syndication model now, or joint ventures. I was doing it through joint ventures at first, where I would get approved for the hard money, but then I would raise the capital. I would call it the debt, the equity side. So I would raise the debt side, and then I would have a joint venture funding partner come in with the equity side, and we would just split the profits. And that's how I started rehabbing. And so it went from one deal to the next. And 2017, 2018, we were doing maybe 8 to 12 houses a quarter. During that time, and little by little the company started to grow. But yeah, I remember not knowing where the money for the next deal was going to come from. But I knew I had to come up with it somehow, and so just kind of stepped out of the comfort zone too.
So what does your business look like today?
So today we're a lot more diversified. So I'm doing less wholesales, although I still love wholesales, and I think it's a great way to make quick cash flow. And even with the wholesales we do now, we do a lot of basically the remote wholesale. So we're in a lot of different markets. We're doing some more high-end flips here in South Florida. We're also we started implementing the BRRRR method. So we started refinancing some of our flips, paying out the lenders and the hard money lenders and the investors, and getting some more favorable terms and actually keeping the property. So we've been building our portfolio. Some are traditional rentals. Some are vacation rentals, so Airbnb, VRBO, that kind of thing. And then since then, we've done also a few multifamily syndications, on the smaller side, around, between 10 and 20 units. And so right now we're actively rehabbing a 12 unit, which we intend to, it's beachside here in Central Florida, and then a beachside town. And so we intend to convert that into reposition it as a vacation rental. Beachside vacation rental. Nice. So that's an exciting project that we hope will be ready here in January, just in time for our peak season down here. Nice.
So how is the market affecting you? And since, you started back in 2015, how are you handling the change in the market? What do you think may possibly be coming, and how are you kind of positioning your company for that?
Yeah. So, I definitely feel like we're at or reaching the top of the market. Where, I'm looking at prices in areas that I'm familiar with, that I farmed, where, let's say, there's certain areas that I've done half a dozen to 10 or even more within literally the same neighborhood, where I can drive around a 4 or 5 block radius and say, oh, I did that one, I did that one, I did that one. And I remember, I know the prices I bought these houses at, 2 years ago. 3 years ago. And funny, I'll tell you a funny story. So, one of these that we actually now are renting out as a vacation rental, I had someone that had a house around the corner, literally a block away, a block down, a block over. And they saw that we refinanced it and what we traded at with the refi. And they reached out to us and say, hey, listen, we have a house here that you might be interested if you want to buy it. Which is another neat thing, when people know, when you get, when people get to know you in your market, they actually bring you deals, which is a nice benefit. So, he brings me this property, and, I have a price in mind, and he's telling me that he wants the retail price. And I'll give you the numbers. I mean, my house I bought, about it was about 230,000 in 2018, early 2018. And right now it's appraising at over 500. But we put 100,000 into it, right? So there's still a nice spread. But here we are now in 2021, and he's asking 500 for his, which still needs 100 and 150,000 worth of work. I mean, I'm looking at the property. There's an unfinished addition. He's got a bunch of lien violations and fines that are turning into liens. And he's telling me that he wants retail price for this property. And I'm like, this is insane.
Yeah,
like,
people are losing their minds right now. I mean, they don't know what to do. I know it's so crazy. I was talking to somebody yesterday, actually, and they're looking for a house to live in, personal home. And they're like, they've been looking now for like 5 years for a house. They can't find what they want. And they're like, some of these people are, it was funny. As an investor, I hear this and it drives me crazy. But he said, I'm looking at this house and this guy wants $100,000 more than he bought it for. And I said, is that the going rate? Like, is that the actual going rate? He's like, I don't know, but that seems greedy. And I was like, I mean, house prices are up. People are selling right now. But to your point, I think some people are like overinflating what's happening, right? Like they want to make all the money and more, and when their house doesn't really compare to houses that are fully renovated.
Exactly.
But people have to realize we just happen to be in a seller's market. Like that's just where we are. And if you're looking for 2015 prices in 2021, you're going to be disappointed. But yeah, man, I hear you. We talk to people all the time. We do a lot of wholesaling. That's mostly what my business is. And we talk to people all the time. That's like, I know prices are up, but calm down a little bit. Like your house is a disaster zone and you're looking for the same price as your neighbor who just renovated their house or had it renovated, right? Totally insane market we're in.
Yeah. My typical response to that is like, sure, you can get that price if you put X into it, whatever it is, it's 50, 70, 100, whatever it is. And then of course you get that price, but you'd have to get it to that condition. Yeah.
And by the way, hurry up because we don't know what the market's going to do in the next 6 months, right? So
exactly.
You put 100,000 into it and the market starts going down. You may not get all that. So this is all the wholesaler and me talking, like you can do it, put 100 grand into it and hope and pray that the market doesn't shift while you're doing that. Or just sell it to me right now for the price that makes sense. And
exactly. And I think the key to that, for as an investor, whether you're a wholesaler, rehabber, I mean, at the end of the day, we're looking at the same numbers pretty much. Mm-hmm. It's just to be disciplined and have a clear understanding of what your buying criteria is, what your numbers are. And the way I train our acquisitions team is, we have a clear cut formula where we say, okay, if we know the ARV is this, then we need to buy it at this price. Right. Okay. And then once we get into it and we start seeing, okay, the difference in rehab costs, depending on the condition, maybe we'll have to go back and renegotiate and adjust. But, we have to stay within this range so that we have X amount of margin available in the deal, because that's what's going to protect us. It's one thing to get into it and maybe you don't make as much as you did, but at least, let's say worst case, you make, less or you break even, God forbid, but you don't want to lose money, right?
Sure. So, absolutely.
So that's always the key.
Absolutely. Now, I want to dive into this technology that you're working on because it sounds very interesting. I'd love to kind of get the elevator pitch for what this is and why people should care and why you developed it, because I know you kind of say it's like made by us for us kind of a thing, meaning it's made by you, made for you, by you. But what does it do and why did you even, because building a technology tool is not cheap. So why did you go down that road? What was the need you were filling?
Yeah. So last year when COVID hit, there was obviously kind of a slowdown during, the majority of the year from March all the way through about August or September. And so we were sitting around and, I happened to be in a unique position where one of our partners, he is a software developer, he's a software engineer. And so he has the knowledge. And, he specialized more into the financial field, like trading and stuff like that, trading software. But we started talking and it's like, well, wouldn't it be neat if we had this, a tool out there that could help us, with marketing, and utilizing the, Facebook Pixel, and all these different tools, which, for those of the out there that don't know, Facebook has a feature where obviously they capture all of your information. They know you better than you do yourself. And so the Pixel is, how this information, how you're able to target your audience that you're looking for. And part of my issue is that I would try to market through Facebook ads or Instagram ads, and my ads were always getting blocked.
Okay.
And so it's very frustrating. And I mean, my account even got shut down at one point, and I think it had been shut down for several months at this time. And I'm like, hey, can you get my account? Can you get it open, unblocked again and get it? And how can I start making, these paid ads through social media, because we're in real estate. So it's always tricky. It's a special category. And so one thing led to another. And we came up with this platform. We have a proprietary algorithm that integrates directly with Facebook. We actually have a license to integrate directly with Facebook and use their pixel for targeting and retargeting audiences that we're looking for. And in our case, we're looking for motivated sellers. So we were looking for a way to set ourselves apart from the competition. Because everybody's calling leads, cold calling, door knocking, sending out mailers. So there's always the traditional things. And so I was looking for a way to kind of step out of that box a little bit and have more inbound calls, more sellers seeking us out.
Sure.
And so since we also have the retail brokerage, we started beta testing it. Just looking for sellers and buyers. It's a little bit of a wider net. It's not as niche as distressed sellers that that as investors we look for. So let's go out to a wider market. And so we started beta testing it with the retail side on the brokerage, and we were getting great results. I mean, we're on a $5 to $7 a day ad spend. We were generating hundreds of leads at a cost of 97 cents a lead.
Wow.
Where we're getting warm leads actually responding, coming in, and we're able to then with the algorithm retarget a lookalike audience. So it's like we could determine our exact customer, and then now we could go out and retarget as many of those customers as possible to increase our returns. And it's been working out great. And so now we've actually decided to roll it out. Like I said, we've been beta testing it for about a year. And we were our first customer, and now we have a couple dozen customers that have been helping us beta test it, and we're getting ready to launch it officially out to the public. But it's I call it a lead generation platform, but it's a lot more than that. It's fully integrated. It has obviously a CRM, a dialer. It's integrated with your IDX website if you're a realtor, and a bunch of other features that we could sit here and talk about it for hours. But just in a nutshell, I mean, it's a great tool, and we're very excited to be launching it.
You talk about like pay, what it costs per lead, and I'm kind of thinking about like what we spend for Google AdWords, for example, right?
Sure.
Like, can be very, very expensive, especially when you talk about the management cost of that, right? The management cost of a Google AdWord campaign is, from my experience, anywhere between $1,500, $2,500 a month, something like that. And that's before an ad goes out, right? That's
before the ad spend.
Yeah, that's before the ad spend.
Exactly.
So this sounds like a pretty cool platform. How can people find out when you do launch it? Where should they go?
Yeah, I mean, our website's live. You can go to isam360.com, www.isam360.com. And you can go ahead and check it out and get all the information there. There's a couple, you can sign up for a free demo. There's some demo videos so you can get a better idea of what it does.
Right.
And check it out and see if it's something that would work for you.
Very cool. That's isum360.com, isum360.com. Go check it out. Man, George, it's been a lot of fun having you on. I appreciate your time. Nothing but luck to you. I love people who innovate and try to come up with better ways to do things that we're all trying to do as real estate investors. And I just gave a presentation last week at Flip Hacking Live, and I told them on stage that leads are the oxygen of your company. Like, you have to have leads. If If you don't have leads coming in, you're dying. You're just dying, right? It's like somebody choking you. So anything to find better quality leads at a better price, I'm all for it. I think it's awesome. So thank you for developing that. Thank you for putting it out there, and hopefully people go check it out. George, man, thanks again for doing this. I appreciate it, and best of luck to you the rest of the year.
Yeah, thank you so much. Likewise.
All right. Thanks, man.
Take care. Thanks.
All right, that was a fun conversation. George is a good guy, and that software that he's developing sounds cool. Sounds really, really great, right? It's what we need as investors. We need better, cheaper ways to find leads. And when I was at Flip Hacking Live this past week, it was definitely one of the messages that I gave to folks. Like, stop worrying about all this stuff that maybe isn't going to move the needle for your business, and start focusing on leads and making offers. That's really in raising money, right? That's really the heart of what we're trying to do as investors. And so any tool that can get us closer to that, I'm in favor of at least checking out and seeing if it works, right? And if it makes sense for us. So go out there and find those leads, make offers, raise money, build your business, and stop thinking about it. Go and do it. All right, guys, we'll talk to you next time.